Hi and welcome to this Forex week ahead analysis video with me, John, senior market analyst here at 𝖢𝖣yiy. We're going to be going through the currency strength meter in this video. We're going to be going over the data this week as well. So stick around for some interesting charts to watch. Well, what have we got coming up this week? Arguably the biggest day today is going to be Wednesday. We've got that federal funds rate decision forecasted here to see a 25 basis points cut, but we'll talk about that in a little bit more detail in a moment. We've got Bank of England announcement as well, expected to leave rates unchanged at 5%, and we have a BOJ announcement as well, policy rate expected to leave rates unchanged at 0.25%. We've also got some other important data out. We've got some retail sales data out of Canada and the UK. We've got the unemployment claims as well coming in out of the US, obviously retail sales out of the US as well. So it's going to be interesting to see how Tuesday shapes Wednesday, and the reason why I'm saying that is because of where the CME Fed Watch tool is positioned at the moment, showing a 50% chance of a 50 basis points cut and a 50% chance of a 25 basis point cut. So basically a coin toss on whether we're going to get a 50 or 25 basis point cut. How that impacts the market and volatility in the market is going to be interesting. I think obviously a 50 basis points cut could increase volatility. Typically in volatile markets, we can see the market move more towards safe havens. We can see a decline in sort of equity markets. So US equities could come under a bit of pressure there. I have put equities should be bullish in the long term. Reason being is because it can lead to people borrowing more in terms of credit. If they're then going out and spending credit, they're spending more within the economic machine, and more spending can obviously lead to more growth, right? So that's why it could be bullish for equities in the long term. Now, taking a look at the currency strength meter here, it's kind of highlighting a little bit more of that risk off sentiment again. Although the volatility index was lower last week, we can still see the dollar, Swiss and yen as stronger currencies. Weaker currencies are the Australian dollar, the New Zealand dollar and the Canadian dollar, as well as the euro. You can see the dollar here in that reversal zone, and since then it's just been rallying higher quite significantly. So very strong bullish run there. You could maybe look for some reversal patterns on obviously dollar yen and dollar Swiss franc coming off those highs as well. Yen though, I'm cautious on selling Japanese yen at the moment. I think it's a currency that could remain fairly bullish. Let's talk about the US dollar index. Where's that positioned heading into this week? Well, we're at that key 101 level. The next level down towards that 100 or 99.75 area is also going to be of interest going forward. If we see a announcement from the Federal Reserve, that could cause some downside volatility in the short term, maybe a rebound from that point. I'm expecting some kind of dollar bullishness to come in at some point. We've been fairly negative. We're at these key areas of support right now. Market has been pricing in the cuts from the Fed. That's why we're seeing this downside and devaluation of the dollar. So as that move been priced in now, I think obviously 50 basis points might not be. And if it wasn't, then we could see some volatility and a bit of downside from that initially, but I do expect some kind of rebound, I think. Looking at cable then, so obviously we've got a Bank of England announcement. We can see we're in a strong upward trend here. We rebound from the 1.3s last week. Looking at the 4-hour chart on the right hand side, you can see we've changed trend. We've broken higher, highlighting that dollar weakness against the Great British Pound, and you can see we're hovering above that 1.31s at the moment, breaking above those highs, so we could see some support coming in down towards the 1.31s. Going on to CAD yen then, I like the idea of being short this market. We can see we've closed in the sort of wick here again after last week's performance as well. And I like downside. So if we get any kind of shock rallies up to the 104.50s, if we stay below the 50 moving average on the H4 time frame, I think we could see a little bit more downside, perhaps into the 101.70s or the 100 area. And gold could be one to watch this week. Obviously, we've broken into fresh highs. Is this momentum going to continue? Potentially. I think if we see some downside into that sort of 25-30 handle, then it could be an area of support in the short term. So it'd be interesting to see how the market plays out this week, especially with the high impact data, the market could be pushed more towards those safe haven currencies. Let me know your thoughts on the week ahead in the comment section down below, and I'll speak to you in another video very soon.